Hello traders, JD here with your Rational Trader Market Analysis Daily. In today's video, how to maximize arbitrage opportunities in a rational market. For those of you not necessarily in the know, one of the things that I do at the Rational Trader or as the Rational Trader is exploit market inefficiencies on a daily basis, intraday trading, where I can exploit pricing inefficiencies based on an analysis conducted pre-market that takes into account multiple factors, 7 of them, to calculate an arbitrage score that then is very predictive of where the markets, at least according to my models, should be trading that day. I then take that forecast and overlay it against futures trading, and where there's a discrepancy, that creates the arbitrage that I can then trade at the open. Ideally, I get in and I get out of the market, generating anywhere from 50 to 100 basis points of gains during really inefficient markets, and a little bit lower, quite a bit lower, say anywhere from 20 to 30 basis points when markets are more efficient. I've noticed in the last, 3 days or so, 2 out of the last 3 days at least, that the predictive power compared to the futures, compared to the outcome, have been very, very tight. What does that mean? That means the market is behaving very, very rationally. So it makes it more tricky to do what I do and generate significant outperformance. The goals of utilizing this methodology is to generate significant market outperformance while at the same time preserving capital. So just real quickly, this year, for example, 2025, year to date, including today's trade, we're up 14% year to date. The month of June, up until this week, I had been outperforming in the month of June. But after a couple difficult days where the arbitrage didn't correct as my models would have forecasted, we gave back some of those gains. So we're also in the middle of a rip-roaring rally up to historical highs, and perhaps, which I do think, we are going to get through historical highs, given that the economy is very strong, et cetera, et cetera. I don't want to spend a lot of time talking about why I think the markets are going higher. This video is really meant to explain how to exploit arbitrage opportunities in that narrow window during efficient markets. So today was a really good example of that. My model, the daily arbitrage score, came in at 2. 2 suggests a market gain of anywhere between 50 and 100 basis points. Pre-market futures were pointing to somewhat less than that gain. So that's good. There's going to be an arbitrage. And in fact, given the narrowness of the market, I really honed in on the NASDAQ 100 to exploit that arbitrage. So I'm watching the QQQs that I wanted to buy right at the market open, advancing in the last 30 minutes before the market opened. So a lot of that arbitrage that had existed when I identified the arbitrage had dissipated. I quickly pivoted 5 minutes before the market opened, knowing that my entry was going to get scalped on the triple Qs, again, because the tightness of the expectations versus futures versus outcome, okay, remember that, was a bit different with the volatility trade, where we had declining volatility, but the exchange traded fund that follows short volatility had barely budged. And the arbitrage specifically to the SVXY and the underlying volatility index has been very, very stubborn, mainly because traders are quite fearful of, and rightfully so, in this environment, of a volatility spike. Now, my expectation is volatility is going to be drifting gently lower, below 15, and that this arbitrage is going to correct at some point. But given that I was losing confidence in an arbitrage in the QQQs, I pivoted over to that volatility trade. And you can see on this chart here at the open, the SVXY traded very flat, and pretty quickly, I think I got in at 42.37 was my entry on the SVXY, and you can see that. I should add, once I entered this trade at 42.37, again, knowing that prediction futures outcome was very tight, I have to lower my expectations. So I was really looking for a 30 basis point gain today. That put my target at 42.50. And you can see here, we just in the first hour of trading got a little bit above that, and I exited the trade at 42.52 for a nice gain of 35 basis points. Now, what's interesting, you can see on the Qs here that that window of opportunity had dissipated right at the open. And I'm very glad I didn't place my trade in the Qs, because the Qs sold off in the first 30 minutes of trading by about 35 basis points. Now, one doesn't know, okay, this is the one-day chart, and it certainly corrected, but when you don't have, and I'm trying to block it out. I'm trying to hold up my camera, right? So you can't see what happened after the first 30 minutes of trading. But even if you assume I got in at just below 544 and exited the trade around 546, you're looking at 35 basis points basically. And that outcome was highly, highly, highly uncertain. So it really was a smart pivot to that volatility arbitrage and away from the arbitrage that existed in the QQQ. So in a market that's behaving very rationally, we are drifting gently higher up and over the wall of worry. This can happen from time to time, and you need, I guess, I can do it because I have the wisdom and the experience. This presented itself to me very obviously right before the market opened. And I understand that it might not come so naturally to all of you, but I'm really hoping that the more you spend time with me, the more you understand how all of this stuff works. And again, the daily arbitrage can be a very compelling way to generate significant market outperformance while preserving capital. In a rip-roaring market, I will absolutely readily admit I'm going to lag. Now, I can participate in those gains just like I did today. We made 35 basis points. We didn't gain as much as the underlying market. But as I said, year to date, we're up 14%. That's over 100, I'm sorry, that's 1,000 basis points of outperformance compared to where the S&P and the NASDAQ are year to date. So anyway, that's all I have for today, folks. Tomorrow is podcast day. I'm recording bright and early with my co-host, Louis Navalier. Excited to talk to him about the markets. And really, it's just fascinating watching human behavior when you're at these market highs. So we'll have a great conversation tomorrow. I'll be back on Monday with another Rational Trader video. This is JD for the Rational Trader. Take care, everybody. Have a great day, and we'll see you all next time.